I mean, technically, Bitcoin has some inflation because there are new coins that are being minted every 10 minutes on average. However, I personally view Bitcoin as if all 21 million already exist. So in my opinion, it's not as if we're finding new Bitcoins every 10 minutes. 21 million already exist. It's just they come out over time. Bitcoin's kicking gold's ass. And so we'll toss that over there. Like, for example, if 13 years ago I bought gold instead of Bitcoin, I'd be way worse off. Bitcoin is the right thing to own for the last 15 years. It will be the right thing to own for the 16th year and the 17th year. So not only is gold or Bitcoin not lost to gold.
Jack Mallers challenges the way we think about Bitcoin's inflation, reframing it as a story of scarcity, not abundance. Jack Mallers, founder and CEO of Strike, recently shared a perspective on Bitcoin that underscores its unique position in global finance. While Bitcoin is often described as having a fixed supply of 21 million coins, Mallers points out that the network technically experiences a form of inflation, since new coins are still being minted roughly every 10 minutes. However, he reframes this idea by suggesting that all 21 million coins already exist in principle, and what the market sees today is simply a gradual release of that fixed supply. In his view, Bitcoin should not be thought of as being discovered over time but as a predefined, finite resource that is becoming accessible in stages. When measuring his own holdings, Mallers looks at them relative to the eventual 21 million cap, not the current circulating supply of around 19 million. This perspective, he argues, highlights Bitcoin's inherent scarcity compared to the abundance of other global assets. He compares miners to farmers. They invest capital and resources to generate Bitcoin and naturally sell part of their production to cover costs. Yet the broader market sees Bitcoin's supply as stuck in time rather than stuck in the ground like gold. Importantly, once the cap is reached, no new coins will be created and miners will rely solely on transaction fees, reinforcing Bitcoin's deflationary design and absolute scarcity in the financial system. Crypto's biggest moves are coming. Subscribe and enable notifications to catch the next breakout live.
The US government is trying to find a balance sheet they can repress, trying to find a balance sheet that they can sell their debt to. And their answer is stablecoins. And this, in my opinion, and I know a lot of you in the comments are like, I don't understand what you're trying to say. I don't get this. How is this benefiting Bitcoin? Stablecoins and Bitcoin grow in tandem. The fastest way to grow stablecoins is to grow Bitcoin. Okay? That's the Tether and Bitcoin have a ratio of somewhere between 2.5 to 10x. The Bitcoin market cap Bitcoin is substantially larger than stablecoins, and the fastest way to grow stablecoins is to grow Bitcoin itself. And so the US is going to try and solve this problem by growing what they call the digital asset economy, by, quite frankly, finding new treasury buyers by growing the de facto trading pair to Bitcoin. So TLDR, nobody wants bonds. They're going to try and save it with stablecoins. Tremendously bullish for Bitcoin. Gold is flipping treasuries. We are officially, I don't know how else I could put it cleanly, we are officially entering a new monetary era. And this graph here, guys, literally shows it. It is no longer hypothetical. You're no longer listening to the crazy people on Twitter. It is literal central bank reserve assets. Gold is flipping treasuries as we speak. You know, one of the most important properties of Bitcoin is that there is no single individual that has any controlling role or authority. So I love Nick. I think we're all forever in debt to Nick's contributions, even before Bitcoin. Just his work in monetary theory, monetary history, what he's obviously been able to contribute to cryptography and what has become Bitcoin. What Satoshi did was really take a bunch of independent innovations, and his innovation was combining them all in a way that worked. So I think Nick, guys like Adam, are unbelievable contributors to humanity as a whole through their technological innovations and contributions. With that being said, I mean, Nick's just a dude. I'm glad to see him back in the conversation, but Nick's just a dude, just like you and I are. And so, you know, his opinion Here's the thing that I don't think people understand. In order to like change Bitcoin, you have to convince everyone that actually runs Bitcoin to update their software. So, I remember Roger Ver had the most Bitcoin in the world, and he invested in all the biggest Bitcoin businesses, and he got all of the businesses like Coinbase to try and force change down all of our throats. But guess what? We, the people, didn't want to change. So we said, fuck you. And Bitcoin didn't change. So, not to say that Nick's a bad guy and is trying to force bad on Bitcoin, but my point is that, Nick's thoughts and opinions should be measured on their own merits. They should be measured on the substance of them, not him himself. He, of course, comes with some credibility, so you might, look to his opinion on cryptography more than some random dude. But generally speaking, the coolest part about Bitcoin is everyone's ideas, everyone's thoughts, everyone's words are judged on their merit. You're judged on your proof of work. This isn't a credentials-based system where because you were someone in the past or because you went to Harvard, like your opinion matters more. That's just not how it works. So I'm glad Nick's back because he's smart and he's been a net positive for Bitcoin, undoubtedly. But, we'll judge what he says based on merit, right? I don't know if that makes sense. But these OGs, as you call it, they don't have any outsized, they don't have any greater role than you. You can create a company just like Adam has, just like I have. You can run a Bitcoin node just like Adam does, just like I do. There are anyone can be anything. And consensus is the only way to affect substantial change to the protocol. And we all are competing in a truly free market where the best ideas and the best merit, the best proof of work is what lasts. I mean, technically, Bitcoin has some inflation because there are new coins that are being minted every 10 minutes on average. However, I personally view Bitcoin as if all 21 million already exist. So, in my opinion, it's not as if we're finding new Bitcoins every 10 minutes. 21 million already exist. It's just they come out over time. And so, but when I think of how much Bitcoin I own, I think of it out of 21 million, not out of 19 million, something. And so from my standpoint, I think of it as deflationary, where there's only ever going to be 21 million. I own X amount of that 21 million, and everything around me is in abundance compared to the thing I own that is definitively scarce. But if you're talking about like, the commodity premium, like the cost to produce, mining economics, yes, there is, like if you wanted to understand the natural sellers in Bitcoin, like people are putting capital up front to produce this asset. They're going to have to recoup their costs somehow. So there is like the equivalent to a corn farmer right now. And corn farmer puts up a bunch of capital to farm the corn. They sell the corn. Some of that capital goes to then, paying off the financial burden that they took to farm it in the first place. So that is true. But I don't think the Bitcoin market thinks of Bitcoin supply as 19 million to, I think there's 21 million. They just come out, its issuance is stuck in time, not in the ground, right? I've said in one of my presentations, it became a popular meme, gold is stuck in the ground. Bitcoin is stuck in time. So, but with time, we'll get to the 21 million. So I would lean towards deflationary.
As Washington drifts toward policies that echo Beijing's, Bitcoin may prove to be the only true free market alternative. Jack Mallers notes that the United States is increasingly adopting Chinese characteristics in both free speech and economic policy. He argues that the Biden administration's pressure on platforms like Facebook, Instagram, and Twitter to censor narratives around COVID reflects state-driven control that undermines free market principles. Mallers also warns that nationalizing businesses or acquiring assets through coercion mirrors China's economic playbook. If the U.S. were to pursue Bitcoin by seizing equity stakes instead of purchasing it in the open market, he believes it would signal an authoritarian approach. Even so, he stresses that any U.S. accumulation of Bitcoin, regardless of the method, would remain bullish for the asset. At the same time, Mallers rejects the idea that Bitcoin could lose to gold. He highlights that Bitcoin has outperformed gold for 15 consecutive years, cementing its place as the world's best-performing asset. More importantly, he frames Bitcoin not simply as an investment but as money itself, a direct representation of human time, labor, and energy. With nearly $900 trillion in global assets, of which $400 to $500 trillion function as money, Bitcoin is competing for one of the largest markets in history. Since 2009, cryptocurrencies have collectively surpassed $1 trillion, yet Bitcoin continues to stand apart as the most scarce, resilient, and disruptive monetary network ever created. Let's get back to the video.
The US is running like this quasi-China playbook where, I said that, it seems like the left was running a quasi-China playbook by censoring free speech. Like you had the Biden administration going into Facebook, Instagram, Twitter, and literally pulling posts off, threatening leadership team, harsh stuff if they don't censor speech, if they don't form the public's opinion around something like COVID a certain way. We all know that as fact. And so that is the US with Chinese characteristics when it comes to free speech. I would say the right is much more pro-free speech. As far as I'm concerned, we don't know much of the right censoring free speech yet, right? You've got Elon and these guys that are really championing free speech. But the US is now the US with Chinese characteristics because we're like nationalizing businesses, like taking stakes in Intel, and Trump is bragging that he's not paying for this. So he's just using force, violence to steal from people. That's China, right? That's the US with Chinese characteristics. But the question is, how do you get out of the hole we're in? You're starting to see, which doesn't matter what path you walk, you're getting the US with Chinese characteristics. So would it surprise me if the United States said, hey, we'd like a little bit of Bitcoin and we're going to get it from taking an equity stake in your cap table as opposed to going and buying it in the free market? It wouldn't surprise me, but I think it's unfortunate. I do not like the US with Chinese characteristics. That is the furthest thing from a free market. And so I would prefer them buying it in the open market. Either way is bullish for Bitcoin. If the United States starts consciously growing its Bitcoin position, that's incredibly bullish for Bitcoin. I would prefer it done in the open market like any rational person, like any free market activist. What groundbreaking evidence for such an outrageous claim? This technology is going to surpass one of the greatest inventions of our lifetime because it's revolutionary and because Bitcoin will lose against gold. What's my response to that? For one, gold is losing against Bitcoin. Bitcoin has been consistently outperforming gold for 15 years. It will continue to do so. So I don't know what you mean, lose against gold. Bitcoin's kicking gold's ass. And so we'll toss that over there. Like, for example, if 13 years ago I bought gold instead of Bitcoin, I'd be way worse off. Bitcoin is the right thing to own for the last 15 years. It will be the right thing to own for the 16th year and the 17th year. So not only is gold or Bitcoin not lost to gold, Bitcoin hasn't lost to anything. It is the king. If you come at the king, you best not miss, Jawad. Secondly, here's my broader rant that I've given on altcoins versus Bitcoin. Bitcoin is money, okay? Money is our time and energy in an abstracted form, okay? Money is how we store our effort, our labor, our time, our energy. Everyone listening to this, you get up out of bed every day and you do something valuable for someone. And in return for that, you get money. Money is the market good that you're exchanging for your contributions to society, okay? It's what we invented to solve for barter. So I don't wake up and run strike and try and exchange a day worth of me working on strike in 21 for groceries. No, I get paid money and then I use the money to save and later exchange for the things I need, okay? Bitcoin's competing for that. The size of that market, okay? Us humans own about $900 trillion worth of stuff. About half of all of the stuff we own. So real estate, stocks, sovereign debt, currencies, fine art, precious metals like gold. Okay, we own $900 trillion worth of stuff. 400 to 500 trillion of it we're using as money. People own a basket of real estate not because they're living in 20 houses at once. You can't. You can only sleep in one home. They're owning it because they're trying to save money and then later exchange for stuff that they're going to need in their life. They own the sovereign debt because they've monetized it. They own the fine art that they've put on their wall. They don't want to put $10 million on their wall. The $10 million painting is in a storage vault with like armed guards protecting it. They're not buying the art to consume the art, to wake up and have their coffee like, wow, this art is so beautiful. It's $10 million worth of beautiful. You can Google beautiful shit to drink coffee to. They've monetized the art, okay? That means Bitcoin's opportunity to disrupt is about 400 to 500 trillion dollars in size, okay?
Bitcoin stands out as a transformative force in global finance, offering a level of scarcity and security unmatched by traditional assets. Its fixed supply of 21 million coins contrasts sharply with inflationary currencies, positioning it as a hedge against monetary dilution. Over the past 15 years, Bitcoin has vastly outperformed gold, delivering exponential returns while maintaining its role as a decentralized store of value. With a market opportunity that extends across $400 to $500 trillion in global money, Bitcoin competes not just as an investment but as a fundamental rethinking of how value is stored and transferred. As digital currencies gain attention from governments, Bitcoin's neutrality, resilience, and finite supply continue to make it a critical asset for portfolios built to navigate uncertainty and long-term growth. Could Bitcoin's fixed supply and deflationary design make it the ultimate hedge against inflation and economic uncertainty? Bitcoin moves fast. Drop your thoughts in the comments, share with your network, and subscribe to stay ahead of the next big market surge.